Hello, and welcome to Explain the Charts, your go-to channel for detailed market analysis. Today is October 10th, 2025, and we are taking a deep dive into one of the most talked about stocks in the world, Apple, ticker symbol Apple. We've got a lot to cover, including a mix of bullish and bearish news headlines and a thorough breakdown of the charts to see what the price action is telling us. First, let's discuss the current events swirling around Apple, as the news landscape is presenting a very mixed picture. On the bullish side, there's significant optimism surrounding the new iPhone 17. Reports from Wedbush and JP Morgan are citing surprisingly strong demand, tracking 10 to 15% ahead of last year's iPhone 16 cycle. This has led to some significant analyst upgrades, with Wedbush raising its price target to $310 and JP Morgan lifting theirs to $280. Adding to the positive sentiment was a recent favorable court ruling that preserves Apple's lucrative $20 billion search deal with Google. However, the bearish case is also gaining traction, with a notable downgrade from Jefferies sparking scrutiny over the stock's valuation. They've cited concerns that future growth is already priced in, suggesting a fair value closer to $177, a stark contrast to its current trading price. Persistent questions about Apple's AI strategy lagging behind competitors and the fact that Berkshire Hathaway trimmed its massive position are also weighing on investor confidence. So we have a classic battle between strong product cycle momentum and serious valuation concerns. Now, let's see how this narrative is playing out on the charts. Looking at the daily chart, we can see the broader context of Apple's performance over the past year. The stock experienced a significant run-up to an all-time high near $260 in late 2024, followed by a sharp correction. We saw a major period of volatility in early 2025, with the stock finding a bottom around the $170 level in April. Since that April low, the price has been in a very strong and sustained uptrend, recovering all of its losses and now retesting those previous highs. This brings us to our most critical price zone, the major resistance level between $258 and the all-time high around $260. This area has acted as a ceiling for the stock since late September, and breaking through it is essential for any further bullish continuation. On the downside, we've established a new level of support. The initial support to watch is the recent consolidation low, right around the $253 to $254 area. A break below this level would signal short-term weakness. The more significant, major support level sits at the swing low from early September, around $226. Holding above that level is crucial to maintaining the current bullish market structure. Now let's zoom in on the period following the iPhone 17 launch to see how the news directly impacted price. As reported, Apple stock rose on the official sales launch day, September 19th, and we can see a strong green candle here as the price jumped to close around $245.50. The momentum accelerated dramatically on September 22nd, correlating directly with the Wedbush price target upgrade. On that day, the stock gapped up and closed near $256, a massive move that brought us right up to the current resistance zone. Since that powerful surge, the price has been consolidating sideways, trading within a relatively tight range. This price action indicates that the market is currently digesting both the bullish news and the significant recent gains, trying to decide on its next directional move. Switching over to the one-hour chart, we get a clearer picture of this recent consolidation phase. For the last couple of weeks, you can clearly see the price action being contained between support around $253 and resistance at $258. Notice the sharp rejection we saw just yesterday on October 9th. The price pushed up to test that $258 resistance level, but was met with significant selling pressure, leading to a drop back down to the $254 level by the end of the day. This confirms that sellers are actively defending the $258 price point. Volume patterns here are also telling. We saw high volume during the big upward moves in September, but it has since decreased during this sideways chop, which is typical for a consolidation period. A significant increase in volume on a breakout or breakdown will be a key confirmation signal for the next move. Now, let's drill down even further to the 15-minute chart to analyze yesterday's price action. Here we can dissect that rejection from resistance more closely. Yesterday morning, the price attempted to climb towards the key $258 level. However, in the afternoon session, sellers took firm control, pushing the price down aggressively and erasing all of the day's gains. The session's low was established just above $253, reinforcing that level as the immediate intraday support to watch. This price action shows that in the very short term, bears have the upper hand as long as the price stays below the $258 resistance. Any attempt to rally that fails to break this level could lead to another test of the $253 support zone. Alright, let's return to the daily chart to recap and look ahead. The story of Apple stock right now is very clear. The key battleground is defined by major resistance at $258 to $260 and major support at $226, with a minor support level nearby at $253. So, what are the potential scenarios? The bullish scenario, which I see as having about a 60% probability, involves the price breaking decisively above the $260 resistance on strong volume. This would be a major technical breakout, signaling a continuation of the uptrend and opening the door to analyst targets in the $280 to $310 range. This move would likely be reinforced by positive news on holiday sales figures or a significant AI-related announcement. The bearish scenario, with a 40% probability, would see the price fail at the $260 resistance and subsequently break below the $253 support level. This could trigger a deeper pullback towards the next major support at $226. Factors like broader market weakness or negative headlines could fuel this move, and a break below $226 would signal a more serious trend reversal. Keep a close eye on those key levels and the volume on any move. The market is coiled tight and the breakout, when it comes, could be powerful. Thank you for watching this analysis on Explain the Charts. Please remember, this is for informational purposes only and is not financial advice. You should always conduct your own research before making any investment decisions. If you found this video helpful, please hit the like button and subscribe for more content.